What if a single war could send the entire stock market into a tailspin? The Iran conflict is doing exactly that, and here's what you need to know. The S&P 500 just posted its worst quarterly performance since 2022, dropping nearly 4.6% in a single quarter. Meanwhile, the Nasdaq plunged more than 10% from its all-time high, officially entering correction territory and alarming investors everywhere. Oil prices exploded past $100 per barrel, with Brent crude skyrocketing from $70 all the way to $119. Gas prices nationally crossed $4 per gallon for the first time since 2022, squeezing everyday consumers at pumps across the country. Diesel prices climbed even higher, reaching $5.45 per gallon, up sharply from $3.76 before the war. Amid all this chaos, one sector is actually thriving. Energy stocks have surged an incredible 33% year-to-date, standing completely alone. Companies like ExxonMobil, Occidental Petroleum, and Valero Energy are among the strongest performers in this turbulent market environment right now. Technology stocks, however, are down 7%, while financial stocks have dropped 10%, making energy the only bright spot remaining. Before the war, markets confidently expected 2 Federal Reserve rate cuts coming in 2026, giving investors hope for cheaper borrowing ahead. But now, those expectations have completely flipped. Markets are pricing in a potential rate hike instead, as energy-driven inflation surges dangerously higher. The 10-year Treasury yield spiked from below 4% to nearly 4.5%, signaling serious concern among bond market investors. Rising energy prices are feeding directly into broader inflation, creating a dangerous cycle that threatens the entire economic recovery currently underway. But here's something important to remember. History actually offers some reassurance during moments of geopolitical fear and market uncertainty like this. Across 30 major geopolitical events since 1939, stock markets fell an average of just 4% according to Deutsche Bank research. Typically, stocks drop about 6% within the first 3 weeks of a geopolitical shock before beginning a strong and steady recovery. Markets then fully recover within the following 3 weeks, suggesting this current volatility may be temporary for patient and disciplined investors. Stay informed, stay calm, and remember that market storms rarely last forever. Knowledge is your greatest asset in uncertain times like these.